your Dividend Friend. I'm here just to kind of jump in and say, hey, how's it going for you? I know a lot of people are having a hard time because of the uh, the race, the presidential election. You guys don't worry about it. It's going to be okay. We're going to be fine. But I wanted to come in today and talk about the Fed rates and the cut. Remember, they just not had a meeting yesterday, and they did cut rates. Do you, like most people, think, oh, that means they're going to cut the mortgage rates, are going to go down? Not necessarily so. When it comes to the Feds, when they have rate cuts, that is simply saying that, and of course they dropped, I think it's 0.25%. What that means is that it's a Fed funds cut, which means that the banks are able to loan to other banks and to allow them to meet their reserves. Banks have all kind of compliances and things like that, so they have to be able to meet their reserves. So it's letting the big banks loan to a smaller bank and saying, hey, I'm going to loan to you to allow you to meet your reserves. It does not. Hi, David. Hi, second act comeback. How are you doing? So it doesn't mean you're going to see a big mortgage cut. Okay, it's not going to happen. But, here we do velocity banking. With velocity banking, we do what they call HELOCs, home equity line of credit. Now, when you hear about a Fed rate cut, that does affect the home equity line of credit. What it does is that it actually helps you. So when they make a cut, guess what? You're going to see the benefit of that. I give you an example. On my HELOC, I have an 8% interest rate, plus, of course, the prime as well. But what it is that I am able to notice I got a 0.25% cut. Great, right? The last time the Feds met, they did bring the Fed cut rate came down. It affected things like a HELOC and a credit card. Look at your credit card statements. You're going to see a decrease. So I'm expecting that if things are going the way they're going to keep on going, that I'm going to see another cut in my HELOC rate, which means less money I have to pay to borrow their money. That's a good thing. Now you may say, look, I don't want to take out a HELOC. I don't want to do a credit card thing. Or I'm excited because my HELOC is going down when it comes to the interest rate. Also, my credit cards, when you hear Fed funds rate cut, you're going to see a difference in your credit cards, which means you're going to pay less to borrow their money or to use their money. But I want to tell you something. When you think about interest rates, you think about cuts, do you know when actually you can expect to see a mortgage rate cut? When they have things like jobs report, they have things like inflation, those affect mortgage rates directly. So I'll give you an example. Last month, the jobs report was supposed to, for the month of October, was expected to be low, which means if they did a cut, it would actually help home buyers, or, if you want to buy a new home, perfect time to buy it. They might cut rates. But what you didn't know was that the jobs rate came out and it said it did double what they expected. I think the economy added like 256,000 jobs. Well, they beat projections by double. So what it means is that interest rates, you guys, they went up. And during the presidential election, they went up. Kind of weird, I get it. But the Fed rate cut did affect HELOCs, and it also affected credit cards. But remember, as I told you before, when they have those federal funds, those cuts, it actually helps the bigger banks to loan money to the smaller banks to allow them to meet their reserve, which is their compliance measures. So it's really pretty much banks helping each other out. Another thing, be kind of mindful, like a high yield savings. High yield savings is always going to be a very good idea. But when you do a high yield savings, whenever they have a mortgage, or an interest rate cut, it does affect that too. Let's say you had a 5.15% high yield savings rate. Well, it may take it down to 4.85 or 9%. So you're going to see a little dip in what your returns are going to be. But still, you can't beat a high yield savings, because if you're getting even 4% back, you're doing a really good job. So I don't want you being fooled and thinking, oh my goodness, Fed rate cut, mortgage rates are going to come down. No. It's tied to something different. When it comes to yields and things of that matter, that's what you want to watch when it comes to anticipating a mortgage rate drop or decrease. You guys, kind of sad news. As we all know, President Trump is known whenever he's the president. It flourished during his administration, no doubt about it. He's a businessman. Stock markets, they all shot up. They did record numbers. Elon Musk, one of his right-hand men, Tesla stock, I checked it out, last I saw was at 313. That was earlier today. Those things all shot up. So sad to say, we have a strong economy, which is a good thing. So mortgage rates for now, they're going to stay at about the 6.8, 6.9% rate. Now, that's not to say that when President Trump takes office, takes the oath, that they may dip a little bit, and he may say, hey, you know what, to encourage people to buy homes, we're going to, have a rate cut that's going to affect the mortgages. You guys, I don't know. But if that doesn't happen, look at the economy. When you start seeing inflation climbing up there, they want to stimulate the economy, you want to buy a home, they're going to drop those mortgage rates. Or if you see they have a really bad jobs report, is less jobs been pumped into the economy, then we can anticipate a mortgage rate decrease. But for now, no. So for those who are looking at maybe possibly getting a HELOC, no time like the present, as long as you have pretty good credit, I would say at least a 675, 700, you can get a HELOC. And you're going to see a nice drop in the old rates. The new rates are going to be better. When I took it, I was like an 8.5% was prime. Now they're actually lower than the 8.5%. And as I told you, if you take a look at your statement for your HELOC, for those that have them, the rate is down. It's coming down. So we can anticipate maybe another rate decrease because the Feds met on Thursday, November the 7th, and they had a Fed rate drop. So your HELOCs are going to be cheaper now, interest rate wise, as well as your credit cards. So I'm just a voice. You make the choice. If you're going to use credit cards, use them wisely, but also knowing that with this current Fed rate drop, it will in fact impact your credit cards. You don't pay as much in interest. But also, if you're looking to get a home and you think they're going to drop the rates, not necessarily so. When it comes to, once again, I'm going to repeat myself, when it comes to things like a mortgage rate drop, they're going to look at the jobs report, they're going to look at inflation. Those would directly impact whether or not we receive a mortgage rate decrease. So until the next time, until the next video, I'm a Dividend Friend. I'm here until you win. I want to encourage you to have a wonderful, exciting weekend vacation. You get 2 days off of work, refresh yourself, do something that's going to really help you and inspire you, and just do you this weekend, okay? Just do you, do something that's going to be just fun for you. It's what they call self-care. Do self-care this weekend, okay? I think I'm going to try to, if Michigan wins, I'm going to be super duper happy, but if not, hey, we won national championship last year, so what more could you want, okay? We'll talk to you soon. Bye-bye. Hey, cuz, how you doing? Love you, cuz. That's my cuz from Detroit. Hey, cuz, love you. Cuz, go back and watch my video. I'm talking about how the federal interest, those federal rate cuts, how they really didn't help us at all. So if you want to buy a house, it's not going to help. But if you want to take out a HELOC, or if you want to look at your credit cards, that federal rate cut yesterday will affect HELOCs, and it also will affect your credit cards. Okay, cuz, I love you, mate, way more. I love you more. I got you beat. Okay, cuz. And the rest of my audience, I'm your Dividend Friend. I'm here until you win. Have a wonderful weekend, and go blue.